welcome to the channel. In this video, we're going to talk about Tesla. We're going to look at the daily chart, the weekly chart. Basically, we look at the charts to give us a little bit of an edge. It helps us identify where price is going to go in the short term, long term. It helps us remain calm when markets are choppy. It helps us know when we've got a good price, when we can get good risk reward entries and then de-risk as things get a little bit spicy. Other than that, we're going to take a look at the short and long dated open options interest. That gives us a little bit of an insight in what the big boys in the market are doing. We're going to look at the Tesla news, see what's coming on the horizon. Is it exciting? Is there some bad news coming? All that good stuff. Other than that, though, if you can't be bothered to stick around for the main content of this video, I'm still super bullish on Tesla, and that's pretty much the key takeaway. Other than that, my live portfolio there is linked in the description below, and I've chucked it up on the screen there for you. Doing pretty good for the last 2 years there. Okay, so everyone loves to talk about Tesla right now, and I'm sure, as usual, I'm going to get so much flack for this, but, I'm going to talk about it anyway, because it's one of my key convictions for 2026, so now is the time. So chart, can't lie, looks like hot garbage, downtrending, it's hitting its head on resistance a bunch of times. It's the volume shelf's kind of caving in. We are kind of holding at 217, but honestly, if earnings is terrible, then it's going to slam down. We'll talk about more of that in the news section, but key support under there is going to be 177, and I honestly would love to be able to buy more shares at that price. I did put here a note, build my position through July to August, so I never had the expectation that this was going to be a good stock for the first half of the year. It was always going to be towards the end of 2025 and then 2026, 2027. That's where the magic seems to be on the timeline, as it were. That said, we do know Tesla is a hell of an unpredictable stock. I do really wish I'd trimmed out more on this rise. I knew it was a pointless rise. It was basically just because Trump won. That's really the only thing that pushed the price this high. But can't say I'm too sad. I've been able to bolster my position substantially on this drop. But I would actually like it to be larger. But I don't know if I want to do that before earnings, because earnings could be interesting on this one. It's probably going to be a miss unless China FSD is good, but we'll talk about that later. Other levels on the stock to be excited about? Well, excited, a bit more reserved. We need to really get back above this 246 volume shelf, and ideally we want to be breaking out this downtrend and getting back into this channel, this bull market band. That's going to still give us some really rough area. If we can break into it, we should be able to rise through it quite quickly up to the 344 level. I'm still pretty confident we'll at least get to 500 by year end. But yeah, I don't know if that's going to happen on this earnings, because like I said, it's definitely going to be not the best one if you're judging this as a car company. But if you're judging this as more of an options play in the future, then you might be pleasantly surprised. There are some things as well that could make this a beat, even though everyone's pegging it as a miss. RSI is kind of cooked, bullish kind of divergence still, but it looks like it might invalidate if we get some price action to the downside. MACDX Plus, we've had a bunch of bottom catches, and kind of the moving averages are just kind of sitting there, not doing anything. So again, that's just a bit And the fund flow, that's really supporting a bottom pattern here, but again, whatever the chart says, earnings and macro changes can blast that away. We see that all the time. We can only really identify levels where we would like to buy more and areas we would like to trim some. I don't trade my long-term investments as a date. Like, I don't have an entry price and an exit price and a stop loss. That's not how I do this. I just areas of key interest. That's all I'm interested in. I want those key areas so I can kind of ride the volatility of it a little bit. Obviously, Tesla's a really good one for doing that, but I don't want to do it too much with Tesla because it's so unpredictable. I don't know if I'm going to miss a big move like we had with the election. Obviously, one piece of news for Tesla can make this absolutely rocket or tank. So I'm never kind of all in and I'm never kind of all out, if that makes sense. But let's take a look at the weekly chart. Might find something interesting here. So again, we've identified key levels we're interested in and stuck with trading those mostly. So really, we're at kind of a really important level. We've fallen below it. The next one on the weekly would be about 185. But really, this orange support line here should be quite strong as well. So some confluence here. This would be really tough to break below. But if we did break below, not a lot of support going on there. You're going to be relying on historical support, and that traditionally is quite weak. You're looking for where the most buyers step in at that price, which would not be down here. To the upside, though, again, what we looked at, the bull market band is really chunky. But really, most of the volume's here, so I expect price to chop around here if earnings isn't great, at least till the next quarter or the next event. Apologies that the lighting isn't great. I didn't make a video yesterday because I moved office into the snake room, so you can see all my snake tanks behind me, and the light from the window is super blinding in here, so I might have to switch back to the other room for more recording. But I do have 2 offices, so that's not too much of a problem. But anyway, let's get onto the options market because we might see something exciting there. Looking at the chart, that is a hell of a range for 1 week. Would say probably don't be expecting to hit 400 by Friday. That is quite ambitious. There is a lot of bearish flow on this one, and the bullish flow seems to be pretty contained up to $300, which is a much reasonable area, but still that would be quite an upside move if we did have it. Do we have a measuring tool on this one? I don't use this chart very often, so I don't think we do. But either way, the expected move on this one's kind of within a sensible range. So the low of 200 would be kind of where I'd expect to be support. Let's push it out week though. Again, more bearish flow. So short term, people are expecting Tesla price to sink, and that's going to be your bigger funds, hedge funds and all that stuff. The market makers, though, still sitting at 200, so they're going to want to keep it above that to keep these shorts in max pain. They don't want to pay them any money, so they will buy if they have to. So that's going to give pretty good support there as well. Pushing out a bit more, kind of all the excitement fizzles out. We've got a lot of strike volume there, which I'm pretty confident they won't be holding that long. But let's go out to the end of January 2025. May, June, July. January 2026 even. Still quite bearish actually. I would expect to see a lot more, but let's pull the chart down. That looks a lot better. Again, there's a lot of people bearish, bullish on these, but these might be people that just wanting to capture some short-term downside. Like I said, 2025 is going to be choppy. They're ramping up a lot of stuff. Obviously, infamously, Elon's timelines aren't great, so we might see some chaos from that as well. So the long and the shorts will probably quite rewarded there for trading. But I imagine if we go out to 2027 again, they're probably back to pretty high conviction on the upside. So yeah. So short term, even the big boys are expecting chop on this one, so don't be surprised if we get chop. And we've seen the price action can be very volatile on this one. But again, I'm not sure we'll get under 200, but I'm super happy if we do. So that's the best way to position yourself with stocks you love. Be happy if they go up, be happy if they go down, and then you can never really lose, can you? As long as you've still got the most important part, the conviction that the company will do well, and be able to back that conviction up with some numbers. Obviously, Tesla being a really, really high growth potential stock, it is a bit more hard to justify that. You're going to really need to build models and project out other companies you can get as value plays, and you can get them cheap and know they're cheap today. So a little bit different from growth and value. Tesla news, obviously we've got earnings today after the bell. It's going to be interesting. I'm going to try and listen to it live, but I've got a lovely dinner on for my wife, so we'll have to wait and see. I certainly will be keeping an eye on it on my phone. I don't know how I'm going to manage to do that on the slide, but so if we just go through what's on the screen first. So we've got these new castings being shown around. They're everywhere. No one really knows what they are. They're definitely not a Cybertruck. That's been confirmed. So these are either the Cybercab or an affordable model. There's certainly a lot of volume there. So I don't know. I'm not here to tell you what they are and what they're not. What I do know is something's coming. They're certainly preparing for something. I'd like to get some information on this one. My gut's saying it's the Cybercab ready for the rollout, but they could be one and the same. We don't know. We don't have enough details. Also, Gary Black I find him overly bearish sometimes on more sentiment. He's very good at more the numbers side, but he doesn't account for a lot of sentiment with a lot of stuff. But his estimates seem quite low. He's obviously expecting the China FSD not to be great. I'll let you read all of that. I don't need to read it all for you, but yeah. Other than that, Joe Bakdi, I don't want to butcher his name, but I fear I may have just done that. Is pretty much bang on the money when I think he said Tesla earnings call will be a litmus test of where the markets will head right now. I think we're all very clear that we think the standard metrics for what's good for a company is going to be not great. We might get a tiny beat, but everything's going to fall perfectly, and I don't know if that's going to happen with the way the macro is as well. But I think if this goes well, the markets will feel a bit more relieved that the end isn't near, things are scaling up as they should. But again, Netflix kind of should have had that impact with convincing the market in general that the consumer is okay. Normally that's the gauge for that. But that really was probably one of the only green stocks the other day. So we'll have to wait and see. Other than that, though, I did make some notes. Let me just check through them. This earnings for Tesla is mostly going to be about guidance and stuff that's coming. Obviously, they've changed the name of it to company update. I don't think that's as exciting as everyone's making it out to be. Maybe they just changed the wording because they felt like it. Maybe they wanted to tease people and wind people up because they're pretty famous for doing that as well. For the size of the company, they certainly do have a sense of humour sometimes, so we can't deny them that. I do expect them to talk quite a lot about tariffs on the call. The Q&A, certainly, they're going to be getting some questions about that. I'd be shocked if they don't. Estimates on average from analysts coming in at about 0.42, so quite a bit higher than Gary Black's there. It's probably going to be the first quarter in a while where they don't make 20 billion in rev, unless FSD take rate is good in China. That can bump that over, but we'll have to wait and see. It's really hard to figure out the take rate because the average selling price of a vehicle has the price of FSD included, so they have it as one line item instead of two. Honestly, if the only update out of this meeting was they separated that data point in the earnings deck, I would be super happy. Going forward, I think it's going to be really important to have those as separate items so we can figure things out and model a bit more accurately. Just because a 1% difference in take rate can massively change the projected numbers for earnings. If it's a 1% take rate, which would be quite low and not the best, it's probably going to be a miss, but a 2% could be a beat. So it could make a lot of difference with earnings and projections. I think a lot of people interested in the stock want to see that a separate line item. I'm also really excited about the energy numbers. Obviously, the new factory is up and running. So I want to know more about the margins on that and if production's fully up and running or if we're still scaling. So that will also help models a little bit. So in a nutshell, don't bet your horse on this earnings because it's lining up to not be great, but typically that means they can come in and have some good news and break that chain. Tesla's really a good company at doing that. When you think it's going to be terrible and it's not quite as terrible as you think, it can have quite a rally. So bear that in mind if you're going to try and short this earnings. It could be quite risky. I'm not having any trades on for earnings on this one, just to be clear, because I don't know either way which way it's going to go. That's us all done and dusted for another Tesla Tuesday wrap-up. If you enjoyed this content, give the video a like, share it with your mum, your nan, your dog, your dad, whoever, and subscribe to the channel, and I'll see you tomorrow.